What is up, you guys? Nick here, and in today's video, we are going to be discussing huge news out of the NIO camp. I've said it before, and I'll say it again. I'm strictly a long-term investor. I am NIO long. NIO to the moon, baby. In this video, I'm going to be discussing what has triggered this short-term catalyst, where NIO's proceeds from their capital raise share offering could land them, what they are putting this capital towards, why investors are once again bullish on NIO, and whether you should currently sell, hold, or buy NIO heading into NIO Day in 2021. But first, Webull has improved their promo. They are now offering 4 free stocks worth up to $3,700. All you have to do is 1. Sign up, 2. Open an account, 3. Deposit in at least $100 using the link in my description. This is a complete no-brainer. Webull offers some of the best analytics in the game. I use this platform every day. They are 0% commissions trading platform. This one ends soon, guys. Do not sleep on it. If you haven't yet, make sure to hit that subscribe button. I do a ton of videos like this covering EV, tech, IPOs, and innovative disruptor companies. And more importantly, I would really appreciate it. Smash the like button for the YouTube algorithm. And without further ado, let's get right into it. Alright, so let's get to some news. As you may already be aware, NIO has announced an equity raise of 60 million additional American depository shares, which at current share prices would land the company around $2.5 to $2.7 billion USD. They have the option of 9 more additional shares to the underwriters. We have seen other major electric vehicle companies perform capital raises in the past few weeks: XPeng, Li Auto, and probably most notably Tesla. Now, I want to make one thing very clear from the start of this video, and that's why NIO has performed the share offering. It is much less likely that there was an imminent need for this capital raise, and much more likely that NIO is harnessing the current market. There is intense interest and current spotlight around the electric vehicle industry as a whole, and NIO is using this to their advantage. Now, understanding this and truly believing in this, as I have said in previous videos, I harnessed this opportunity of a falling share price to purchase a bulk quantity of additional shares at what I consider a sale price relative to my long-term valuation projections. If NIO has done one thing this year, one main takeaway is that they have raised a ton of cash and cash equivalents. From last year, they have completely 180'd in terms of their short and medium-term liquidity. So when I heard that NIO was performing a share dilution, I was not surprised, as I had previously predicted this and priced it in. They were using this opportunity to better position themselves for the coming environment, building up an absolute vault of money. In the investment world, we call the amount of cash they have now raised an absolute ton. They are using this to rapidly and robustly capture up market share and expand as fast as possible. Startup companies will typically try to do this. Their main priority at all costs is to continually raise capital to essentially burst into the market in an abrupt manner before competitors have a chance to catch up. This extra potential $2.5 to $2.7 billion within the NIO camp will be huge for this company. Shares of EV companies are, to say the least, flying off the shelves, and this may not always be the case. NIO saw an opportunity and followed suit, as many other companies are currently doing in order to be able to sell shares and raise capital when they can. As the saying goes, dig the well before you need the water. This is what NIO is essentially doing. They are raising the capital before their short-term problems become long-term viability problems. They are digging the well before they need the water. NIO has stated that they are also using this cash to advance their autonomous driving software and technology. As you may be aware, there is a huge demand for autonomous driving and L4 autonomous technology, or mind-off driving. This is currently taking place in China. Being the first company to implement L4 autonomous driving in a mass-produced vehicle in China would bring with it a swath of publicity and notoriety, and it would be huge for any company. NIO is indeed one of the frontrunners in terms of autonomous driving and is continuously unloading cash into its research and development. They are also using this liquidity in order to be able to expand into Europe next year, where they plan on launching in Copenhagen, Denmark. This requires an enormous quantity of cash, and NIO is building this up. They are taking control and harnessing the current market sentiment. With more and more companies within China heading into the electric vehicle industry, the already fierce competition continues to grow, and NIO needs to continue pushing until it has gained a secure foothold in the market. Until then, vast quantities of capital will be continuously needed to be raised. This is a marathon, not a sprint. Investors should be aware of the ups and downs when investing in startup companies, especially in the automotive industry. Now, NIO appears to be emerging as a frontrunner electric vehicle company in China. Their referral rates on new buys has yet again increased, up over 60%. It has now 62% customer referral rate. This is actually probably bigger news and more important than you may think. Referral rates are actually one of the main statistics that investors and analysts look for in new automotive industry. It shows just how much brand recognition the company is receiving, and with increasing brand recognition comes increasing deliveries at an exponential rate. We saw this huge early brand recognition and referral rate within Tesla in their early years, and I think we all know where Tesla has ended up. They're doing pretty well in case you live under a rock. There have also been two bullish sentiments coming from Wall Street. Edison Yu, a bullish NIO analyst, has become a household name for NIO stock nerds. He has reinstated his $50 price target with a buy rating. I do think this will continue to push their short-term share price up for the next few days and weeks. The average Wall Street price target is sitting at $49.01 with a moderate buy consensus based on 7 buys and 4 holds. I do think we will see valuation surges moving into 2021 as there is so much hype surrounding NIO Day and their sedan release. Also, with their expansion into Europe and their continuing deliveries month after month, this stock will continue to escalate. And if it doesn't, you know what? I will be buying. I think it's easy for short-term investors to lose sight of long-term movements in a company, and I think it's important for us to be reminded of just how much promise this company holds. Bull analysts are forecasting NIO's delivery number to be roughly 130,000 in 2021, generating revenue of north of $7 billion. This is around 25% of Tesla's current revenue of 2020 of around $30.7 billion and its present market cap of around $600 billion. NIO's current market cap is around $60 billion, so about 10% that of Tesla's. However, if NIO is able to produce 130,000 vehicles in 2021, 25% of Tesla's vehicles this year, this implies that NIO's market cap could rise to around $150 billion, a quarter of Tesla's currently. Using this logic, we can then assume that NIO stock could be trading at around 2.4 times present price by the end of next year, over $100 per share and representing about 140% gain. I do not think investors are stepping back and looking at the bigger picture of what this company could be and how much promise and upside they hold. I think it is great practice to zoom out and put on your wide-angle lens and realize the future is very bright. NIO is currently hovering around 43.50, and I do think we will continue to see a surge in price. With more capital comes more opportunity for this company to continue expanding at an accelerated rate. Another bull NIO analyst, Kevin Lau from Daiwa, has also initiated on NIO with a price target of $59. He believes that NIO is emerging as one of the frontrunners in the Chinese electric vehicle industry. He cites that they are distinguished amongst 3 others and does put them on the podium. He also states that he thinks that NIO will be able to reach profitability by 2023 if they are then able to deliver 140,000 vehicles. I, for one, do think this is on the conservative edge and do believe they will be able to reach profitability earlier than that and believe they will be delivering more vehicles than this sooner than this. It's important to note they have more than doubled from last year's delivery number of 20,565. They are on track to deliver 43,000, and I do think this doubling will continue. They are exponentially growing, expanding, and with growing brand recognition, will be able to continuously deliver more and more vehicles. The future is so bright for this company. Anyways, everyone, I hope you enjoyed the video. I hope you learned something. Hit the subscribe button if you haven't already. Don't forget about the Webull Promo for free stocks worth up to $3,700 when you sign up, open an account, and deposit in at least $100 using the link in my description. This is a no-brainer, guys. 4 free stocks worth up to potentially $3,700. You can't beat that. Webull has some of the best analytics in the game. I'm not just saying that. I would not promote an app I didn't believe in myself. Hit the subscribe button if you haven't already. Smash the like button for the YouTube algorithm. Anyways, everyone, thanks for watching. Thank you so much for the continued support. I will see you all in the next video. Take care. Happy trading. NIO to the moon as always. Cheers.